Welcome to TradeTheMBI.com. This is Jonas Reporters for the 4th of September. And we start the month right here up at the highs. And, this has been the steady rising shakeout after the little reset we had, these little dips that began at the beginning of August. But been a nice move, very clear with the rising red DOC. We ended up with cyan below the red line, which is always a buy. And we cruise through. Now, the important part of this is we also got a reset of steel, meaning short-term buyers, plenty of them still available. And now we're just sort of stuck in this consolidation, and that usually is very cleanly represented here by the fact that you have this convergence of mid-term buyers, long-term buyers, and the shorts all right at the same 0 point. The only flex has been the short-term buyers pushing things up and down, and that's given us some of the volatility we've had. All we've done is retouch the ABM gold here, or yellow line as I always call it, and not really tested even that. That happened just a few days back. We were kind of expecting that when we had that little bit of weakness signal here on the steel crossing below cyan, which usually creates that kind of situation. At the same time, you had green below red. And it was almost a DOC spread, but there was just no spark from it in the sense that usually you want that to be like one of these dramatic mouth openings that we talk about, where you get the significant spike of orange, the steel falls, and then you get significant dip of green right there, But it's got to continue, and it did the next day, boom, but then you had reset. So there wasn't anything that needed to be redone. You'd already covered the positive extreme, and that's where we're at. And that's just because there's just not enough news impetus to drive things lower at this particular point. So it still requires new buyers, and we've got new fund money coming in here right at the beginning of everyone coming back from holiday and that. So they're going to be looking at it and saying, we missed all of August, which started out pretty modest, and now we've seen a significant increase and we haven't been around. So now you've got a bunch of people behind the curve, and they're going to need to catch up. And so you can see the NQ doing far better. Look at that. So the shakeout's already above the warning line, above 15. Certainly not the same readings from the S&P. And that divergence in the market is going to create more volatility because you're going to have arbitrage plays in between. We're also seeing the euro coming right back to the top line of the expected band, which is right in that middle 115.5 range. It had this brief little push out, which led to the highs for the ES and that. And as it comes back in, that will put a little bit more downside pressure. But as long as it stays even between this 115 and 111 on the bottom side, the market's going to be okay. It's just this is a nice premium add to it when you move outside the range because of the amount of earnings, and we've gone over that before and over again. It doesn't change, but it's important to recognize, and that's why we go over these charts, because you have to pay attention. Same thing with treasuries, and that way elevated given what we're seeing from the potential of rising rates. If the Fed doesn't raise rates, that would be a positive impetus, though some will look at it from the negative side and think that, well, they're seeing some kind of softening or whatever. But the reality is that every little quarter point tick is becoming more and more devastating budgetary-wise. We would not be having the deficits if interest rates had stayed the same as when Obama left office. The rise that we've already seen has created the deficit that exists. Otherwise, it wouldn't be there. And has it been necessary? Have we seen the inflation? Probably not. But it was a good opportunity because as the Fed sees it, well, at some point in the future, we'll have weapons to attack. And at the end of the day, if you're still getting decent growth without causing it to turn the other way, the problem is that's a fine line, and they're always late at it because they do it just a little too quick. And oil being at the top side of the range, not the greatest, particularly from an inflationary standpoint. That should have provided some spark to gold, but the reality is, as I've said right now, the gold trade is really converted into oil as a more liquid movement, and I think that's been the strongest aspect of things. Until that changes, we'll see it because you get a reset of steel and we'll get a nice spike down. This has been a slow ebb, but every time it breaks into a new zone, it's in very weak and soft conditions. You get these spiders where you get the green that just cross back over by the cyan rising, and the shorts take back over. Right at the ABM, I mean, this has been a decent move. You had the first up retrace and then back up consolidations, not looking all that different than the ES. So this was always a fun one. This was looking at the action Friday before Monday, and very clean signals. It's, again, this was an interesting one too, because we started with the improvement of the shakeout down near the lows, and it happened at a point where you got the rejection right here, subtly, but you're getting cyan moving below zero, you're getting the steel spiking up, orange going down, and green having just crossed red. Even if you wait until above the 23 is fine in my book. And oddly enough, it happens at a gold where you expect that to retrace back to the lows. Well, it does do that. It's just you have to wait for it to finish the little algo move, and sure enough, that creates a beautiful DOC spread, which leads to return all the way back down to the 0 point. You ended up with a couple of resets, and some people will say to me, well, how is that any different than these setups? Not so much. In fact, you made a lower low. It's not a bad setup, particularly if you can get it at the lower levels. The point is, though, you just don't expect it to produce a sustained run. So it's one of those where if you're looking to capture, a couple points and you can see the ranges between, you're able to catch somewhere in the, bottom half of the zone here in between 0 and 23, and then just catch a ride up because they tend to come back, retrace, and in this particular case, you went from the step down to the minus 20. This time, you're above the negative 13.5, much more bullish from that aspect of it, and you're not getting a dip below the red line at the matching lows. See, so you retested the low without being in an indicator low, meaning that this was just a fake move in price to justify the reset. And sure enough, and it even gave you a secondary time. So you get the first move, retrace 50, get all the weak hands, and then boom, you get these big giant candles that have the giant wick. And that's where sometimes you're going to have to be in it ahead of time and go with what you're seeing from the rising red value. And in this particular case, then, once you moved above 50, obviously, even if you're late to it, 50 gold above to the 100, piece of cake with that one. Then look at this, we start getting these conglomerates, the dots. This one retraced it, almost all of it, not quite, which meant that there was going to be, and then you even have this one back over here that still needs to get filled, right around the 2900 range. Another set of big short conglomeration, and sure enough, that one retests, and that actually does fill in back all the way down to this one down here coming across. So it did that in the pre-market. Now you're getting a boost right back up to the peak levels after the reset. Question mark becomes here whether or not you're going to get the red long-term buyers to move back above the 0 point where they've been previously. And this is such a clean short because you end up with the spike move, and then boom, you had orange rising, you had the DOC spread along with green dipping below red at that particular point, even before steel had turned over. And then by the time steel does turn over, this bar starts and it just boom, cascaded. That was a quick one. But when that happens, oftentimes, if you don't get that dip below the red line, you see, you get that immediate reversal. And that's exactly what happened. That's what you're seeing in the midst of right now, return back to the highs. And this should probably break out to a new high, in fact. Given what we're seeing here, you got the reset completely above the 7.5, so that's pretty strong. Last time we saw that was right about here, and that broke up to a very significant move. We'll just have to see how it plays out. If you're not getting into a higher shakeout, then that could be an issue. So, good way to start out the return. Everybody who sees that they've missed out, wanting to jump back in, and we'll be watching that 100% marker here, which is at 29.1750, not too many points away from it. So that's very much in range, and likely that we could see the start out from that. If you compare what we started August with, the open was at 28.10, so it's a 100-point move, and a lot of people were on vacation for it, which means they've got to make up for not being around and not being in it. After all, they sold in May, back here, which wasn't too much different. They were right at the 27. So if you sold in May and went away, you're not feeling so good. Keep that in mind. Doesn't mean we can't get back down to it. It's just point of reference. That's really how the market works, in the sense that they've got to match yields, and that's the primary focus. But as always, I will put up charts on Skype chat. Trade well.